Excellent. Well, yesterday, as we were discussing the weaponization of the financial system and the increased use of the dollar as a means to exert political pressure on countries and on other sovereigns in order to comply with the U.S. world order. Of course, the ongoing crisis in Ukraine was the center of that discussion. And towards the end of it, we discussed whether the role of crypto. And I'm excited to learn about your views on whether crypto has been a stabilizing force. Of course, there have been reports of, and there's been a large amount of money raised by Ukrainian nationals. Ukrainians who have been struggling to access infrastructure have utilized Bitcoin and digital assets in order to be able to support their ongoing war efforts and day-to-day livelihood. At the same time, there are rumors or reports of oligarchs utilizing Bitcoin to avoid sanctions. So, Bill, I'd like to start with your views on this, and certainly, I'd like to. You've been part of an effort to bring justice to a lot of, let's say, criminals and people who have committed atrocities. I'd like to say that you were sanctioning Russian oligarchs before it was fashionable. And I'd love to hear your views on whether you think crypto is a risk to those efforts, whether it undermines those efforts, and your view on whether it has been a means to avoid sanctions.
Thank you. So I normally have to worry about Russians coming after me, but judging by the number of hands of people who own cryptocurrency here, I think the things I'm going to say, maybe my risk is from the people in this room. If you want to go to the bank right now and withdraw cash, the most money you can withdraw from a commercial bank is $9,999 without basically providing a form to whatever government that is, whether it's here or in the United States, to explain why you need more than $10,000 in cash. Why do they put these rules in place? Because back in the day, when people wanted to launder money, they would take suitcases full of cash. They would bring them into Swiss banks, and the Swiss bankers would then deposit the cash, send it on to someplace else where they can then withdraw it and do it again, and no one would know where that cash came from. And so the way to solve money laundering is to regulate it so that people can't launder money. And that doesn't exist in the world of cryptocurrency. You can put on a flash card $10 million, and you can then hand that flash card or that thumb drive to somebody else who can then have that money. And that creates a real problem. It creates a real problem if you're dealing with criminals, and it creates a real problem if you're dealing with people who are sanctioned, who you want to prevent from using that money. And I've spent the last 12 years of my life putting in place something called the Magnitsky Act, which is named after my Russian lawyer, Sergei Magnitsky, who was murdered in Russian police custody. And the Magnitsky Act freezes the assets and bans the visas of human rights violators in Russia and around the world. And I, for one, would be pretty upset if somebody was able to get around the sanctions that we put in place by using a cryptocurrency which is not regulated. And if I'm feeling that way, I'm sure that the government officials who put the sanctions in place are feeling that way. And so I think that there's a real issue with cryptocurrency being a tool that can be used to get around, run circles around governments and regulators, and I think that's going to cause problems for cryptocurrencies going forward, as governments usually take a decade longer than innovation, and I think that the governments will catch up.
So, Dr. Nouriel, I'd love to hear your views on this, on whether crypto is principally a means to avoid sanctions, possibly also whether you have views on the on-ramps and off-ramps for crypto between traditional financial systems and the crypto world, and whether there are sufficient controls in place or how those controls have been effective in helping to address and comply with sanctions that are being imposed by sovereign authorities.
Well, I would say the following. When the brutal Russian invasion of Ukraine started, the two types of arguments. There were those who said that Russians are going to use oligarch or otherwise crypto as a way of avoiding sanctions. On the other side, people said, Ukrainians are going to be able to receive a lot of financial aid through crypto. I think that both statements are exaggerated. As far as I can tell, I saw a press report that said the total amount of money, aid and support that Ukraine has received via crypto is about $106 million. Honestly, that's spare change compared to the $33 billion that the Biden administration has committed to Ukraine and the $40 billion that the House has passed and so on. And there'll be much more money and support coming from Europe and other US and European allies. So if $106 million, nice, but it doesn't move the needle in any way or form. And I would say that, yeah, some individual Russian oligarch we don't know, may use some crypto to essentially control or keep their own assets. But I think that the sanctions have been very heavy. They've been very effective, trade sanctions, financial sanctions. Many of the assets of these oligarchs and other people that have been sanctioned have been seized in Europe, in the United States, around the world. And therefore, I think that there is a limited ability to bypass sanctions by using crypto. The truth about crypto is that people think about crypto as being anonymous, but it's not anonymous. If you talk actually to law enforcement authorities, they say we prefer that illegal activities, whether it's money laundering, terrorist financing, human trafficking, tax evasion, other types of criminality is done with crypto, because while we may not know who is behind that public key, everything is on a public ledger. And actually, you can track pretty much every transaction. If you have to instead use to try to find the same criminals, go through the traditional offshore financial centers, it's a bunch of boxes and step until you figure out who's behind it. And in a number of cases, actually, as well-known, law enforcement has been able to figure out who is behind that public key and then essentially indict them and convict them and you name it. So I think that this idea that crypto is anonymous, I think, is a bit of a misstatement. And therefore, the process we're undergoing is one in which there was an industry, the crypto one, that was mostly unregulated. But given everything has happened between the scams, the collapse of stablecoins, not protection of small investors, plus the concern that whether it's MAL, KYC, those things are not enforced, and there is lots of other illegal activity. I think that right now there'll be a process in which these things are going to be cracked down on. And already, the existing exchanges, they have to, know who's behind those accounts and keep track of them. And if a law enforcement authority has a legitimate reason to go and say, let me see who's behind that account, they can go, and then the Coinbase of the world will have to go and tell them who's behind those accounts. So I think that for now there was a huge amount of regulatory avoidance or regulatory arbitrage, but the same way the OECD cracked down on offshore financial center, I think they're going to crack down on the aspects of crypto that are, unquote, anonymous and unregulated. So that's the direction we're going to.
Yesterday, when we were discussing the weaponization of finance in the US dollar system, there was a lot of discussion around the third countries, countries besides Russia, Ukraine, and the United States that have had to decide to what extent they would be involved in the either condemning or standing against Russia. Now, a lot of pressure has been exerted by the U.S., and a lot of that pressure is exerted by the fact that most sovereigns hold their reserves in dollar or dollar-denominated assets. There was a lot of discussion yesterday around whether this weaponization of the financial system gives additional interest to third countries or additional impetus to those countries to seek an alternative reserve asset besides the US dollar. Now, we discussed what are those alternatives and the fact that there isn't a suitable or obvious alternative. Bill, you discussed extensively putting your eggs into the basket of regimes like the Chinese and Russian regimes, what the implications are for that in the long term of, for example, African countries. But what about crypto as a reserve asset? Not just Bitcoin, but the overall technology and approach behind it, where there is not a single party that has the ability to exert that level of power or influence over the system. The approach of these permissionless public protocols. Do you think that this weaponization of the dollar system will give rise to an increasing relative attractiveness of crypto assets as reserves?
Well, I think in a certain way, the markets have weaponized crypto for anybody who wants to keep it as a reserve currency. I mean, it goes up, 50%, it goes down 50%. You can't have a reserve. You can't keep reserves. That becomes a speculative asset, a highly speculative asset, and I don't think that any responsible government in the world would want to tie their fate to the vagaries of the market. And so I think it's, what is it, Nicaragua? Was it Nicaragua that?
El Salvador.
El Salvador, sorry. Yeah, El Salvador. I mean, so this thing could go really bad for the government of El Salvador, where they end up not being government anymore if the price of Bitcoin were to collapse. And so I think it's really it doesn't make any sense at all. Now, if at some point, I mean, it used to be that central banks, and even today, central banks hold some of their reserves in gold. Gold is, for the exact reason that you've stated, that gold is something that other governments don't control. But even gold is interesting because usually the gold is not held in their own country. The gold is held at the vaults in New York or in Switzerland or something like that. And I mean, so one could argue that at some far point in the future, if the volatility of Bitcoin or other cryptocurrencies were to stabilize and it becomes more of a store of value than a speculation, one could argue that like gold, a central bank might diversify into a cryptocurrency. But I've not seen any indication so far that that's a responsible thing for anyone to do based on the price movements.
So price movements, volatility are obviously would be a concern for governments. Now, Nouriel, you speak to a lot of sovereigns. I'd love to hear you elaborate on some of the points that Bill mentioned. And also, it's an interesting time given the recent failure of an experiment or an ecosystem that was attempting to create an approach to a stable token, but avoid the centralization that comes with stablecoins that hold reserve assets and are backed. I'd love to hear your thoughts overall on how sovereigns are now looking at this, how sovereigns are looking at the crypto ecosystem, and whether there are approaches or whether you think there's a solution out there for at least dollar stable or relatively stable asset to exist within the crypto ecosystem without giving up the decentralization that would allow that technological governance rather than sovereign governance over it?
Well, you know, within the sovereign community, I would say there is a whole spectrum of views. And by the way, central banks are one thing, sovereign wealth funds are another thing. I was recently at a conference where both the central bank governor of Saudi Arabia and Pakistan spoke. They were both quite skeptical, and they said, we like to ban in our own country crypto. In the case of Pakistan, because they say they already have so much trouble with the US, with terrorist financing, and they're worried that that will be another avenue, and therefore they don't want to be seen as facilitating that. In the case of Saudi Arabia, there are concerns about financial stability. But then, for example, MBS has plans in terms of economic development that include developing blockchain technologies. So there are different views. I would say the debate within the central bank is whether to create central bank digital currencies, what are the benefits, the pros and cons. And that debate is related to the one on whether, as opposed to central bank digital currencies, one should be going for, you know, stable coins. I would say that within the central bank community, nobody really worries that Bitcoin or any other cryptocurrency is going to replace fiat currencies, because I think at this point, even within the crypto world, is recognized these are not unit of account. They're not scalable means of payment, certainly not in the case of Bitcoin's proof of work system. They're not stable store of value. They're not single numeraire. They might be assets, but they're certainly not currencies. I think that instead, stable coins may be a substitute for central bank digital currencies, but I think that correctly regulators are worried about the instability of these stable coins if they're not truly stable. And honestly, Terra USD was a total scam. I mean, you can debate whether Tether is fully backed or not, but at least up to a certain point is backed, and maybe it's backed by assets, might be slightly risky, like a commercial paper in Chinese institution, but there is some backing. There have been 9 billion of withdrawals, and it withstood. It fell below the peg, but the return. But Terra USD was backed by nothing. It was backed by Luna, that was another total vaporware cryptocurrency. So it was an accident waiting to happen. I think that the US regulator have told those who are reputable, like Circle and USDC, you want to have a stable coin? Good. Get a bank charter. Make sure that you're fully backed by very safe, liquid, short-term assets. And as long as you do that, maybe we're going to let you have that stable coin, because the last thing they want to do is the repeat of what happened in 2008 when there was that run on a money market fund that broke the back, and then they had to backstop and bail out pretty much, or guarantee the entire multi-trillion-dollar money market fund system. So far, the size of crypto is not so large and is not so leveraged that the systemic effect, even the collapse of Terra and Luna, a whole bunch of people lost a fortune, about $80 billion of money, but has not had systemic effects outside of the crypto space. But in the future, if this asset class were to become much larger, we've seen the correlation between tech and growth stocks and crypto. And if crypto goes down, people can lose money and sell their NASDAQ holdings, and vice versa as well. So I think that those are the kind of things that have to do with systemic financial stability that the regulators are going to be thinking about.
Well, Bill has a BBC interview, so I know that he's tight on time. I would like to open up for one question. Before doing so, I do have one final question on whether crypto has been a stabilizing force at all, in your opinion, and not just for aid, but there were quite a lot of reports. We're based in Dubai, and there were quite a lot of reports in the media, which I believe to be false and unsubstantiated, that Russian oligarchs were coming there and liquidating billions of dollars of crypto. Certainly the exchanges that we know, the organizations that would be able to provide any ability to do that weren't seeing it. I strongly believe that those reports are likely to be false. Anyway, it's what I can confirm and what is a reality is that crypto was a lifeline for a lot of ordinary Russians and Ukrainians. We saw quite a number of Russian and Ukrainian highly talented engineers, computer scientists that were coming to Dubai and had their only lifeline was the crypto that they had. Now, what this actually did was it facilitated a brain drain from Russia and something that's going to be impacting Russia in the long term. Now, had these engineers not had crypto, I think it would have been very difficult for them to make that move. They might have been trapped in Russia. Do you think that there's, and certainly for a lot of Ukrainians who were directly exposed to the war, that lifeline was important for them as well, to be able to come to Dubai and to be able to buy their basic needs, get housing, and so on and so forth. So, Bill, do you think that there's any merit in that argument, the way that crypto has helped ordinary Russians, ordinary Ukrainians be able to stabilize themselves in other countries?
Well, I mean, the story you told gives you sort of answered your own question. That obviously, if you're living in a dictatorship, I mean, so the Russian government told every citizen, doesn't matter whether you have $1,000, $10,000, $100,000, or $10 million deposited in a Russian bank, you can only withdraw $10,000. And so, obviously, you want to be outside their system in whatever way you can. The way the Russians used to do this is by having offshore bank accounts. It does the same thing. There's nothing magic about cryptocurrencies versus having an offshore bank account versus having cash in your shoe. Dictatorships are notorious for doing this type of stuff, and you want to try to find your way around those dictatorships. If this works for that, great. But in my mind, the downside of the gangsters, the Russian gangsters who are causing all these troubles, using cryptocurrencies in far greater amounts. And what I can tell you for sure is that, having been involved in these investigations, is that the Russians used to use banks in Cyprus, Latvia, Lithuania, and Estonia to launder hundreds of billions of dollars. And that's all been shut down. It's been shut down. The Danske Bank was exposed as a conduit for laundering $232 billion of illicit funds out of Russia. So, and then of course all the governments in these countries have now become legitimate. So it doesn't mean that the Russian gangsters and kleptocrats are not stealing. What it means is that they're having to find some other way to launder the money and move it out. Why did art prices go up so much? Partially because people love art, but partially because for a while art was a great way to launder money. And so they'll constantly be looking for ways of doing this. And so what I would say is that cryptocurrencies have a real huge contingent liability, which is that if it's used for criminal purposes, it'll get shut down. And so whoever the next wave of designers of these currencies are, and they should keep that in mind, because it's just not going to, we don't live in a laissez-faire world where governments don't get involved.
Please.
I have a question around the thought of cryptocurrency being very volatile. I'd like to make a comment that maybe the way we've started thinking about volatility is on the back of what we've kind of learned in financial economics over decades, that standard deviation is effectively risk. But there's a first order risk, and the first order risk is the mean. And just to explain that in simple terms is that anything you pick up which is a real scarce asset, a bar of gold, a Manhattan apartment, or a London property, has absolutely gone skyrocketing in the last 50 years in terms of fiat money. I think the first order mean of fiat money is negative. If you can convince central banks to hold that depreciating asset as a reserve asset, what's the problem of something that has a positive first order and only has a very volatile second order?
Well, maybe you want to answer that question.
Well, the fact that crypto is more volatile than other assets, I think it's a fact. When Nasdaq goes down by 4%, crypto goes down by 10%. It's not true that crypto is an uncorrelated asset. It's not true that crypto is a hedge against inflation. You know, from the peak last year of 69,000 for Bitcoin, last week was down to 26. I don't know this morning whether it's 29 or 30. So that's a two-third loss. And lots of people bought at the peak when there was FOMO and retail suckers were coming into their market and so on. So the fact that it's highly volatile, I think, is just a fact. Then whether that asset class or within that asset class, specific assets are going to have high mean returns over the long term to be seen. You know, 80% of all ICOs, there have been 20,000 of them were scams in the first place. Another 15% of them have failed, are worth zero, and a few hundred are left, and we'll see within those whether some of them have long-term resilience or not. But the volatility is by any standard huge, and it's not true there's an uncorrelated asset class or a hedge against inflation or other tail risks that has proven to be incorrect.
Well, I'm so sorry that we are out of time. I would have loved to take another question from Frank. Bill, do we have time for one more?
I really have to go. I'm already.
Bill has a live interview on, so it's, I'm really sorry not to be able to, but we'll continue these discussions throughout the day. Thought it would be an interesting way to start the day with a few skeptics to keep our minds sharp, to hear both sides of arguments. And thank you so much, gentlemen, for joining us for this discussion.
Thank you.
Thank you.